Very special guest now joins us, Rashesh Shah, Chairman and CEO of Edelweiss Group. Normally, of late, we've been accustomed to use him with his FICCI designation. But Rashesh, we'll not talk about FICCI, we'll not talk about India. Why don't you today wear the hat of Chairman Edelweiss Group exclusively, because today it's all about Edelweiss, the vision statement and where the company and the business is headed. You know, Rashesh, I've been tracking your journey for years now, almost 2 decades, and you know, it's a great feeling when we look at what Edelweiss was and what it has achieved. But this kind of a run rate of 35–40% growth, do you think that kind of a run rate is here to stay for next 3, 4, 5 years despite the large base?
Hi Nikunj. I think all of us have been very fortunate in the last 20 years. I think the growth in Indian financial services that we have seen, whether it's in credit, whether it's in asset management, wealth management, capital markets, insurance, I think has been phenomenal. I think average growth rate has been about 18%. The industry segments have grown at about 18% CAGR over the last 20 years, and we think given all the recent reforms we have seen, you know, the insolvency bankruptcy code, GST, the entire Aadhaar based technology, India stack that has got developed, which is going to make credit flow very easy. Given all this development, I would assume that going forward the next 10 to 20 years, financial services in India should continue to grow at the same pace it has grown in the last 20 years, if not even faster than that. So I think the financial services sector as a whole looks very promising, but of course this opportunity, this promise comes with a huge amount of execution focus, because as you know, financial services is about cost, about risk, about people, about technology. So firms which have got this right, and we have many examples in India from, you know, HDFC Bank, which over 25 years has built a marvelous institution. So there have been very good examples that have been set in this industry, and we've been very fortunate, and we are currently at that intermediate size where we are not very large, we are not very small. We just crossed about 10,000 people, and our profit annualized run rate has crossed about 1,000 crores. So we are in the in-between stage. We have at least about 20–30 financial services companies which are bigger than us, and hence I think the opportunity, the headroom for growth still appears to be there for all of us.
Rashesh, the businesses which have managed to grow essentially have been on the lending side, whether it is NBFCs or private banks. But do you think now the growth may not lie with the lenders, it may lie with the managers, whether it is the asset management business or this entire, you know, thesis of financial inclusion? If it grows higher, then the entire nature of financial services could shift from lenders to managers?
I think it's both. I think there is a credit opportunity and there is what we call the capital markets opportunity. But even in credit, if you saw until 2004–5, a large part of the credit growth happened with the corporate sector. Last 8–10 years, housing finance has grown very well. But you know, last 3–4 years, we are seeing SME credit as another big growth area. You must have seen the CIBIL report that came out today, which said that more than 150 million borrowers, SMEs and individual borrowers, are eligible for credit, are credit worthy, but are still not getting access to credit. So I think even in the credit side, there is a fair amount of growth, and I would assume that SME and retail credit should continue to grow at 18–20% per annum for the next 10 to 15 years. So there is going to be a host of opportunities on the credit side. But in the last 8–10 years, even the advisory side of the business, as we call it, which includes asset management, wealth management, capital markets, investment banking, even that has been growing fairly well. And if you look at the profit pool in this area, in the advisory businesses, what you call the managers, even that has been growing at about 20% per annum for the last 8–10 years on a CAGR basis. So I think as Indian households are starting to not only borrow more on the credit side against home loans and car loans and education loans and all, Indian households are also starting to look at their savings and how effectively they can deploy. You know, a few years ago, it was very easy to just buy gold or real estate or keep your savings at the bank. But now people are accessing equity markets, bond market, mutual fund. insurance products and all of that. AIFs are growing very well. So I think Indian households are getting fairly sophisticated both on their borrowing behavior and their investing behavior.
Rashesh, it's great to have you today to talk about your own vision statement. You know, you're present in multiple lines of business like credit lending, wealth management, life insurance. The thing is, when you're penning down where growth would take you into the future, which segment of the business are you most bullish on? Is it going to be a two-pronged, three-pronged strategy to take the business forward?
Historically our approach has always been to build a broad-based, diversified business, and we have a portfolio of businesses. Some of them have scaled up very well, some are currently in the rapid growth phase. So we always have three kinds of businesses. One are which have grown very well, one are in the rapid growth phase, and others are in incubation phase. For the coming 3-4 years, the businesses we think are in the rapid growth phase is our SME credit, what I spoke about earlier, then our wealth management business, our alternative asset management business because of AIFs and private credit where we are the leaders is also growing very well. So you would have seen historically in the last few years our housing finance business, ARC was growing very well, capital markets has grown very well. Now we are seeing significant growth, and I would think the next few years I would be fairly bullish on SME credit growth, our wealth management business and our alternative asset management business. And then eventually we have insurance and our agri credit business, which after 3-4 years will start getting into the rapid growth phase. So we have a fairly good range of portfolio businesses at all stages, and we think there are a lot of exciting opportunities, as I said, provided you can manage your risk and cost and your people and your clients very well.
Also pricing, right, Rashesh? Because this is a competitive market, and all the business lines that you spoke about, there's enough and more competition brewing there. How do you look at building a moat around your businesses to stay relevant and perhaps have a competitive advantage versus others?
Absolutely. I think what you said is absolutely correct. In India, we are very fortunate that we have this growth opportunity ahead of us. But in India, everything is very competitive because I think we have some very smart companies, very smart entrepreneurs in India. So I don't think any industry, any sector which has high growth potential will not have very high quality competition. We have Indian competition and we have global competition because most of the global financial services firms are also strongly present in India. I think the best way to manage competition is to first of all be close to your customers. So we spend a lot of our effort understanding customer needs, understanding customer behavior, and trying to align products and our customer experience alongside that. Now this is easy to say, very hard to do, but I think ultimately, like any other business, historically financial services was very product centric business, but I think in the last 8-10 years has become very customer centric. So I think customer experience, customer centricity has to be the starting point. And after that you manage technology and people to deliver this, because I think the two biggest inputs you have now are your people and your technology, and how do you merge your people and technology to create great products for your customers as per their needs, but also deliver them with great customer experience. So I think this has to be the moat that you build, because at the end of the day, financial services is fairly commoditized. I mean, a home loan is a home loan, a credit card is a credit card, a mutual fund is like any other mutual fund, but you do differentiate in terms of the performance, in terms of experience, in terms of the best pricing for that customer segment. And when you do all of that right, I think you create a moat, and the moat is never permanent in this business. You have to renew it every quarter, you have to renew it every year, because others copy you, you copy others. So I think for financial services, very hyper competitive, and you have to constantly stay on your toes. But I think if you listen to your customers and be close to the marketplace, you can overcome this competitive issue.
Right, for our viewers, Rashesh, I've been asked this question and I frankly know how it works, but just for the benefit of our viewers, NCLT cases are getting resolved, and Edelweiss ARC business has a lot of exposure to some of these ARC assets. So because of NCLT cases getting solved, and the case in point here is Bhushan Steel and hopefully some more by the end of the year, will you get a significant uptick in your ARC business? How does this work? Can you just clarify it for our viewers?
See, I've always tried to avoid making forward-looking statements only for the reason that, the future is always very uncertain, and we don't know how long it takes. A lot of cases are still in the auction process and bidding process. So it's very unfair to give any concrete forward-looking statement. But I would say, I'm very positive with the way IBC process has been unfolding. I think the legal challenges that we read about in the papers and what has been going back and forth is for real. I think on average, in an average case, about 4 to 8 weeks have got added because of the legal challenges and the interpretation issues around the law. But I think on an average, this 4 to 8 weeks has been time well spent, because first of all, the case law has got established. There are a lot of interpretational issues are there where courts have ruled on that. NCLT, NCLAT have ruled on that, which has created a case law for future cases. Along with that, the pricing has also improved because more competitiveness has come in, and I would say about at least there has been a 10% improvement in the prices that the banks and all of us are realizing as a result of this competitive process. So I think on the whole, we have the timelines have got extended by 4 to 8 weeks, but on the whole, the outcome has been more than positive, and we expect it to continue, because remember, half the NPA cases were good assets with weak management, and the ones that our ARC focused on the most were good quality assets, because we have always believed that in India, good quality assets will always have a buyer, will always have a user, you can unlock the value fairly easily. So half the NPA cases in the banking system were good assets with weak management, weak balance sheets, and those are the ones that we have focused on. A lot of those have been the ones that have gone to NCLT, and I think those are the ones where we will see significant value unlocking. We obviously have a fairly large book. We are the leaders in ARC, and the way ARC business model works is you get some fees and current yield while you acquire the assets, but when you resolve, when you get the final payment on those assets, is where you get a small incentive and a carry that kicks in if your realization price is higher than the price at which you bought. And we are hoping that most of the realizations in good quality assets should be higher than the prices at which they were acquired. So I think there will be some future upside, but it's uncertain, and it's not very concrete to say when it will come, how much will come. But I think overall we expect ARCs to grow in India. I think there is, over the last 5 years, ARCs have put in about 30,000 crores of cash in distressed assets in India, all the ARCs put together. We have about 25% market share of that. But I would think going forward, India needs about 25,000 crores of cash being invested every year going forward. So there is a large opportunity going forward. So more than focusing on the past cases, I think the future growth opportunity also looks very exciting.
Yes, it does. And you're going to try your best to capture that opportunity for yourself, for your shareholders, for your employees, for your business. But I say thanks very much, Rashesh, for joining us. It's been a pleasure speaking with you this morning to understand where the business is headed.